Hello everyone, welcome to our channel The Commerce Catalyst. Today we are going to start the depreciation. 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 So what is the meaning of depreciation? Depreciation means the reduction of the value of assets. It means reduction of value of assets. Value of assets. It means reduction the value of assets due to wear and tear or effects of time or due to obsolescence or accident. So depreciation it means reduction of the value of assets. It means reduction of the value of assets. Now, what are the characteristics of depreciation? So the characteristics of depreciation are the depreciation is a process. Depreciation is a process of allocating depreciation cost like a cost minus the scrap value divided by life of assets. Like a allocating of cost. Allocating of cost. Depreciation is a process. Depreciation is a process. Depreciation is a process. Depreciation is a process. What process? Allocating of assets. Allocating of depreciable cost. So how you allocate it? So depreciation formula right here. Depreciation equal to cost of assets. Cost of assets minus the scrap value. The scrap value oblique the eligible value. Eligible value divided by life of assets. Life of assets. Life of assets. So depreciation means, what is the meaning of depreciation? Depreciation is a reduction of value of assets due to wear and tear or effects of time due to obsolescence of or accidents. Now the character what are the characteristics of depreciation? So depreciation is a process. What process? Of allocating depreciable cost, any cost minus the scrap value of tangible assets to expenses over its estimated useful life in a systematic manner. In a systematic manner. So depreciation is a what? Depreciation is a process. It reduces the book value of the fixed assets except freehold land. Except freehold land. First one is the depreciation. What are the characteristics? The number one is the depreciation is a process. Depreciation what? Depreciation is a process of allocating of allocating allocating depreciable depreciable allocating depreciable what depreciable cost depreciable cost depreciable cost. So depreciation equal to cost of assets minus scrap value oblique reasonable divided by life of assets. So that is the depreciation. Second one is it reduces what reduces it reduces the book value of the fixed assets except freehold land. Except freehold land. Number two. Number two. Number two. It's reduce what reduce the book value of assets. It reduce book value of assets. Book value of assets. Book value of assets except except freehold land. Freehold land. Freehold land. Depreciation is provided every year. because the book value is reduced either because of the use or with the passage of time. Third characteristics, depreciation is provided every year. Why? Depreciation is provided every year. Depreciation depreciation is provided every year. Why every year? Because the use of assets or passage of time. Use of assets oblique passage of time. So first you have to understand, my dear friend, what is the meaning of depreciation. Depreciation, it means reduction of the value of assets due to wear and tear. What are the characteristics of depreciation? So depreciation is a process of allocating depreciable cost. So how depreciable cost? So depreciation equal to cost of assets minus scrap value oblique residual value divided by life of assets. It reduces book value of assets except freehold land. Depreciation is provided every year. Why every year? Because depreciation, the assets is used, either used or passage of time. So the value of decreases day to day. So it is not a process of valuation of fixed assets, but accounting of expenses each year. It is not a process. It is not a process. Not a process. It is not a process of valuation of assets. Valuation of assets. Depreciation is a not a Depreciation is not a process of valuation of assets. This is not a process of valuation assets. It is a process of accounting expenses each year. It is not a process of valuation of assets, but accounting of expenses each year. But accounting of process of each year. Process of each year. So you have to understand first what is the meaning of depreciation. So depreciation means reduction of the value of assets due to wear and tear. Depreciation, what are the characteristics of? These are the characteristics. These are the characteristics. These are characteristics. Sticks. These are the characteristics. Depreciation is a process of allocating depreciable cost. So depreciation equal to cost of assets minus scrap value divided by life of assets. It reduces book value of assets except freehold land. Depreciation is provided every year. Why? Because of use of assets and passage of time. And it is not a process of valuation of assets, but accounting of process of each year. And depreciation is a non-cash expenses. Depreciation is a it is a non-cash expenses. Non-cash expenses. It is a non-cash expenses. It means depreciation is a non-cash expenses. So there is no outflow of cash when depreciation is there is no outflow cash. Outflow cash. There is no outflow cash when depreciation is charged. There is no outflow cash when depreciation is charged. Depreciation is an indirect expenses. Depreciation, what is the depreciation is an indirect expenses. So therefore it is transferred to the debit of profit and loss account, and the term depreciation used for tangible fixed assets such as building, plant and machinery, etc. So the term used in the case of vesting assets is a depreciation, and for intangible assets, the amortization term used in amortization. So uh, first again you have to understand and clear the concept ki what is the meaning of depreciation. So depreciation means the reduction of the value of assets due to use, wear and tear. These are the characteristics. First one is that depreciation is a process of allocating depreciable cost. So how you calculate the depreciation? So depreciation equal to cost of assets minus scrap value of oblique realization value divided by life of assets, and it reduces book value of assets except freehold land. Uh, Depreciation is a provided every year use of assets over passage of time. It is not a process of valuation of assets, but accounting process is here, and it is a non-cash expenses. So there is no outflow cash. There is no outflow cash, and depreciation is an indirect expense. Depreciation is indirect expenses, so therefore it is a transfer to the debit and profit and loss account. And depreciation is an indirect expenses. Depreciation is a depreciation is a indirect expenses, indirect expenses, and it has been charged to debit profit and loss account. The term depreciation used for tangible assets, tangible fixed assets like machinery, uh, plant, etc., and building. So in this case of vesting assets is depreciation, and intangible asset of the term used the amortization. So my dear friend, now we have understand these three words. Number one is the depreciation, number two is the amortization, number three depletion. Depreciation, so already understand what is the meaning of depreciation. It means reduction of the value of assets due to wear and tear. Amortization and depletion. So depreciation is a measure of wearing out. Depreciation is a measure of wearing out, consumption, or other loss of value of depreciation assets because of its use, lapse of time and obsolescence. So it is an allocation of cost of fixed assets as expenses over its estimated use full life in a systematic manner. So depreciation is a measure of wearing out, consumption, or other loss of value of depreciable assets because of its use, lapse of time, or obsolescence. It is an allocation of cost fixed assets as expense over its estimated useful life in a systematic manner. And amortization is a gradual and systematic writing off an intangible assets over its estimated useful life. Patents, purchase of goodwill, and copyright, etc., are intangible assets. The cost is amortized over its estimated useful life. So amortization. So number one is the depreciation, and number two is the amortization. 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 And here is word, in one word is the goodwill. Goodwill means reputation. So what is the meaning of goodwill? Goodwill means amortization. Amortization is a gradual and systematic writing of an intangible assets over its estimated useful life. Patents, purchase of goodwill, copyright, etc. So are intangible assets. So its cost amortizes over its estimated useful life. And third one is the depletion. Third one is the depredation. What is the depredation? Depredation. So first one is the depreciation, second one is the amortization, and third one is the depletion. So depreciation is the value of wasting assets extracted from quarry, mine, etc. So extraction reduces the available quantity of material. For example, extraction of coal from a mine is depreciation of coal stock. So depreciation and direct, now the depreciation, amortization and depreciation. And now the difference between the depreciation account and provision for depreciation account. So difference between the depreciation account and provision for depreciation account. Depreciation account and provision for depreciation account. So what is the difference between depreciation account and provision for depreciation account? Difference between depreciation and provision for depreciation. Depreciation. Difference. Difference. What is the difference? Difference between difference depreciation and provision. So depreciation, it is a nominal account. Depreciation, it is a nominal account. What account? Nominal account. Depreciation is a nominal account. Depreciation is a nominal account and it is a valuation of account. Provision is the valuation of account. Valuation of account. Valuation of account. Depreciation is a nominal account and provision for depreciation is a valuation account. It always has a debit balance. It always has a debit balance. Depreciation is a debit balance. Debit balance. Why? Because debit means expenditure. And it always has a credit balance. It always has the credit balance. Credit balance. You have to understand the what is the difference between the depreciation and provision for depreciation. So first you understand the depreciation is a nominal account and provision for depreciation is a valuation of account. Depreciation is a debit balance, always has a debit balance. Why? Because depreciation is a expenditure. Depreciation is a expenditure and provision for depreciation is a credit balance. And it is a temporary account. Depreciation is a temporary account. Temporary account, whereas the temporary account, provision for depreciation is the permanent account. So it is a temporary account, it is a permanent account. It is a permanent account. It is a permanent account. It is a temporary account, it is a permanent account. This account is open, this account, yani depreciation account is open when an asset is shown at its written down value. When depreciation account is open, when the assets is written down value. And provision for depreciation account when asset is shown at the original cost. When at the, this account is the WDV, written down value, and this is the original cost. Original cost. And this account is charged against the assets. Depreciation account charged against the assets. Against the assets. Depreciation account is charged against the assets, and against this account is not charged against the, this provision for depreciation is not charged. This one charged against the assets, charged against assets, and this one is not charged against the assets, not charged against the assets. And this account is appears PL account, profit and loss account. This account is against the profit and loss account यानी PL account, and this account is charged balance sheet and balance sheet यानी shown balance sheet. The provision, it means depreciation is shown in PL accounts debit side and provision for in balance sheet.